As many of you know, we work extensively with the non-medical home care industry. Here in the Commonwealth of Pennsylvania, we do an annual survey and benchmark report looking at various market segments geographically throughout the state. Inevitably, in conversations with executives, we find that there's a lack of understanding about workers' compensation insurance. Not only that, this is one of the larger line item expenses in an agency's P&L. As we seek to be a solutions provider to your agency, we have interviewed a local insurance expert to talk about some of the cost drivers and variables that go into workers' compensation insurance. It's our hope that this information makes your agency stronger.
Workers' compensation premium is calculated with a couple of variables. It's based off of the total payroll for the employees that you have, and there's a classification for the different employees that you have. Each business has a few specialized classifications, and depending on if it's home health care, if it's a restaurant, whatever it might be, it has a specific classification, and each classification has its own rate. So it's basically a multiplier, which will give you what the overall premium is going to be. There are other variables that go into that, though. Oftentimes people don't understand how their claims frequency and claims experience dramatically impacts that overall cost. So one of the items that we try to do more often is educate people about how implementing proper safety measures in place will help mitigate and control that overall workers' comp premium. Your experience modification is a calculation of over the past 3 to 5 years. It takes the amount of premiums that you're paying in and the amount of claims that you're paying out. So if you're having minimal claims being paid out, your experience modification will, trying to keep it very basic, but the experience mod will go into a credit modification. So the more you pay and the less claims that get paid out, you will get that credit modification. The experience model will go from a 1 being even, it'll go down to 0.9, 0.8, whatever it might be, depending on how everything's calculated. If you're having a lot of claims, and just think about it, for every dollar that's coming in, if you're paying out $1.50 for claims, that mod is going to go up, and it's going to go above a 1, and ultimately that is a multiplier, so you're going to have a debit applied to your workers' compensation. What you're rated on this year are the variables that happened for the past few years. So the claims that you had 1, 2, 3 years ago are affecting what your experience mod is today. And that will continue to go. And so if you're having good positive experience, eventually that mod will, that had come up to a peak, will go back down. So it's all every year it's recalculated. And so your previous experience is being impacted into that experience modification rate. And as your experience continues to be good, that rate will come back down.